When you look at the history of the stock market, there are a lot of ups and downs, but the trend is generally upward. It doesn't matter at what point of the market you have invested. In the long run, you have multiplied your investment. Even if you have invested at the peak of 2007 or 1999, the market didn't just recover but have grown substantially. Especially since 2011, the market has been growing faster than ever. Just take a look at the S&P 500. The growth has been unstoppable. Guess why? Because since 2008, the Fed realized that instead of just letting the market correct itself and recover, it can literally print trillions of dollars, throw it into the economy, and it's going to recover much faster, which has worked pretty good for the last two crises. But what stands out in the history of the stock market is February and March of 2020, when the market collapsed. Never in the history of the stock market has it collapsed so suddenly and so severely. What makes this particular crash different from everything that has ever happened is the fact that it instantly recovered, and since then it has been on a roller coaster. That's why a lot of analysts expect the market to crash again, since it's not normal. The market can't just out of nothing rise that much, especially when it's fueled by cheap money. But the question is, why the crash hasn't happened yet? Why it's still growing, and when exactly it will happen? If you're ready, give this video a thumbs up, and here is a little disclaimer. This is not financial advice, and everything that's said in this video is for educational and entertainment purposes. And now, let's dive in. If you have been paying attention, there was a correction last month, and if you're smart enough, you probably took advantage out of it. That was the time to buy. But it wasn't the first correction. Every few months we're experiencing a correction, and each time it feels like the market is going to crash farther. But it never did, and it seems like it is not going to happen in the coming future. What we have to understand is that for the last year or so, we've been during the boom period. It's the time when the economy recovers and grows exponentially. Remember the economic cycle we have talked about in one of the previous videos? The economy starts growing to the point where it reaches its maximum potential, then it slows down. Inflation rises faster than the economy, so the Fed raises interest rates to their maximum levels in order to keep inflation under control. But it limits the supply of money into the economy, so the economy barely grows and kind of grows enough just to cope with inflation. At some point, the bubble bursts, the economy crashes like a domino effect. It happened in 2008, in 1999, and in 2020. That's when the Fed steps in with cheap money to help the economy recover faster by lowering the rates and buying both corporate and government bonds. In the first year or two, usually the economy recovers to its pre-crisis level. Then it goes through the boom period where everything explodes until it reaches the peak again, where it slows down until it crashes again. Judging by this graph, it is clear where the economy is standing right now. Of course, no one knows the future and we can't just say that it is going to crash, but there are usually a lot of indicators that point out what direction the economy is headed to. When the Fed lowered the rates to almost 0%, people expected that as a temporary measure because our economy is a consumer-based economy. The economic wheel turns around because people spend. The moment they stop, everything stops. It just collapses. Turning the wheel again is much harder, so the Fed took an easier path by artificially keeping the wheel turning while we were getting out of the pandemic, which seems like it did a pretty good job. But it never said anything concrete about when it will raise the rates again. All they said is they will do everything possible to save the economy, and it turns out that means keeping the rates low for not just a few months or a year, but a few years until we fully recover from everything. So while the growth has slowed down, with these kind of rates, it's impossible for it to crash. A lot of analysts expect the rates to be raised only in 2023, and that seems very reasonable. Of course, anything could happen by then, but that's so far the most realistic scenario. The Fed definitely wants to raise the rates. No one likes this inflation. In fact, the Fed kept saying that inflation is under control to calm everyone down, when in reality, inflation was much higher than Fed's expectations. The growth that has happened in the last few years wasn't free, it was at the expense of inflation. Prices have soared all across the world, especially on real estate. House prices don't randomly soar by 20 or 30%. That's not normal. That's literally 10 times higher than their usual rates. What happened in the last 1.5 years was a huge experiment. We've never printed so much money in such a short period of time. And it's not just about the US, but worldwide. That's why it's difficult to make any predictions about how it could potentially end when we don't have any similar examples to look at. On top of that, the growing fear about the Chinese real estate market is also worrying investors about how it could potentially influence the world. China is not an isolated economy. Literally every country in the world is connected economically to China, especially the US. So if China falls into a recession, it is definitely going to impact the US and the world in general. You probably have seen pictures of Chinese ghost towns. The problem with China is that there aren't many investing tools available. Yes, they have a stock market and a huge multinational corporations like Alibaba, Tencent, and so on, but they are heavily regulated by the state, which makes their future unpredictable. Today, they are growing. Tomorrow, their CEO gets into a conflict with the Communist Party and a crackdown would begin. Take the most famous Chinese entrepreneur, Jack Ma. He disappeared after criticizing the regime and his fortune was reduced to just $50 billion, losing over $11 billion in the process. See, most people in China threw their savings at real estate because it looks like the most reliable investment. Real estate prices rise, they are immune to inflation, and they could be turned into a passive income source. However, that strategy has backfired, since they have built far more houses than the country needs, which created a huge oversupply of homes in the country. Almost 25% of houses are empty. That is a record number, and in some places, entire buildings are destroyed since they have been around for years and no one has occupied them yet. People in China are buying their third house as often as they're buying their first house, which reminds me of something that has happened in the US not that long ago. Exactly. Low interest rates and loose regulations allowed people to buy multiple homes that they couldn't afford, which led to the 2008 market crash. Of course, that's an oversimplification, but that's what happened in short. And the same could happen in China, which could drag down with it the world economy. But that's just speculation because no one really knows when that bubble is going to burst and how deadly it is going to impact the economy. Theoretically, it doesn't seem like we're about to witness a crash, and it didn't happen in the last year or so because of the reasons we have discussed earlier. It's impossible to predict the crash. The best strategy is to just dollar cost average. But if you're not sure how to start investing in the stock market because you have a million questions, don't worry. I get it. I was once in your position. And to answer all of your questions, I have created a course that is simple, straightforward, and fully animated. I've literally answered almost all of the questions you have in your mind. I strongly recommend it if you're serious about investing. It will not only teach you how to invest in index funds, but will teach you how to analyze stocks and read financial statements. And at the end of the course, you will have to complete an assignment that I will personally check. And the best part of it is that you can get 2 weeks of Skillshare Premium if you use the link in the description and get the course for free. So don't miss it. You can also start your investing journey by getting 2 free stocks from Webull using the link in the description. You have everything you need to start. If you have enjoyed this video, you'll most definitely enjoy this custom playlist that I've created specifically for you that has our most popular videos that could potentially change your life. And now, give this video the thumbs up that it deserves and make sure to subscribe if you haven't done that yet. Thanks for watching, and until next time.